Hello, everyone, and welcome to Rory Money Talks Unplugged. Real talk on people, payroll, and cost-effective solutions that help businesses drive profits. I'm your host, Rory Money, with over 25 years of HR experience and 13 years as a business owner. Each episode, we dive into honest conversations that help leaders simplify HR, save money, and build stronger businesses without the fluff, just the facts. Let's get started. George, welcome to the show. Tell our listeners a bit about yourself and how you got started in the benefits industry and what sets your agency apart from other brokers.
Good question. I guess many years ago when I was at school up in North Texas, I worked for a bank and was the collector and repoed cars and helped with indirect lending. There was a group of insurance brokers that was officed upstairs in the building, and they'd always come down wanting to buy one of the vehicles that maybe I had repossessed. So eventually they talked me into doing a LIMRA test and getting in to see if I would be qualified to be an insurance broker. And long story short, I guess about 38 years ago, they convinced me to come into the insurance business as a life insurance agent at the age of 24. So that's where it all began. From that standpoint, we did a Project 100. That was to list 100 people that you knew that were friends, family, etc. And when I sat down with the manager, he said, "Where's your Project 100? We need to start calling on these people to sell them life insurance." I told him I'd starve to death trying to feed a family or feed myself, selling life insurance to 24-year-old college kids that were bulletproof and invincible. So from that standpoint, we tried to find a niche that maybe would open the door for additional life insurance or additional insurance services. So at that time, Businessmen's Insurance had a 2-to-9 trust product, which was 2 to 9 employees, and started selling medical insurance at that point in time with the traditional concept of you'd have a $500 or $250 deductible, and then it would pay 80%, 20% to $1,000, and then 100%. So there were no co-pays. There were no drug card co-pays at that time. It was just a traditional indemnity type product. So how we've all evolved in the industry.
And that was 30 plus years ago.
That's exactly right.
So when did you, when was Shoup Benefit Group born?
I think maybe the LLC came about 2004, 2005. But prior to that, when I was a career agent with Businessmen's Insurance, at that same time, I was still, we were independent contractors. So while the Shoup Benefit Group was born, George Shoup has always been in the insurance business and have been in the benefits market for most of that time, or that's really our bread and butter that drives our agency.
And you're local here in the Dallas area. What size groups do you typically work with?
Well, as I said, when I started in this business at a young age, if somebody needed insurance, could fog a mirror, and we could put two people together, we would start a group. So, our target market is really the 25 to 150 employees. We have groups that are, much sizable, 500 employees or, 15, 2,000 family members or, members within the group. But our target's really in that 50 to 150. We don't turn down anybody. We have a lot of referrals, and if those are small groups of mom and pop shops, we try to find a way for them to have a benefit, or for them to have health insurance or dental insurance or other things that might add into not just medical benefits, but they may need some life insurance to protect their future or to protect the unforeseen. So we are a small boutique that specializes in employee benefits, but again, there's no company too small for us. We just try to help when we can.
Okay. that kind of leads me to the question. So you and I have known each other for a very long time. I think I was like 10 when you met me.
Mm-hmm.
Actually, I was in my 20s and working at Pine Creek Medical Center.
Right. As the HR director.
Yep. I was just starting out back then, but yeah, like HR manager probably. And so you called on us, and I think through the years we just always stayed in touch. And when I started Magnet HR Group, of course, I partnered with you with all your expertise and knowledge in the benefits industry to help us out and be able to serve the clients together. So, what basic process of getting a quote, a group quote for which carriers do you work with? So, what's your process when you come across, small to mid-sized companies, or either companies that we bring to you, Magnet brings to you? Kind of what does that process look like when trying to quote? And then what carriers do you work with?
Well, we work with all the carriers. I say all the carriers. In this day and time, we've really narrowed our process down in that small group market, the 50 or under the 50 lives. There's, maybe 3 or 4 major players that play in that market. But from when the groups get a little bit larger, it expands into another 4 or 5 others, maybe 6 total carriers that we will take to the market. But backing up in your question just a little bit to the point of what do we do that might be a little bit different, or what does the prospect expect from us? We try to be very detailed going in so that on the backside, once we make our presentations and once we set in front of the client, that we have good numbers, that we have product knowledge, that we know what the client is looking for. So we do a lot of fact gathering at the time of what we would call request for proposal. You can tell me simply that, census template, what's that entail? Names, dates of births, genders, those types of things. But the reality of the deal is that in this day and time, there's tools available that we can utilize that allows an employee to go to a website, to a portal, to be confidential, to share with us maybe some of their medical conditions, those things that will enable us to better place that client with the carrier that's going to best fit their needs. Or, at the end of the day, maybe that will be more affordable for them with the needs or the concerns or the conditions that the group would have in them. But so we do a lot of groundwork initially so that once we're ready to make the presentation for the client, we don't have to be so cumbersome with them in trying to now fact find about their employees, maybe concerns or some of their needs.
What do you really think sets us apart and Shoup Benefit Group when it comes to that fact finding and discovery in the beginning compared to maybe other brokers, our PEOs that may be also quoting that group as well? And, maybe they come up with numbers really quick. How does that differentiate when it comes to your process versus what happens if, maybe their numbers look better from a competitor, but when you really get down to it, they sign the deal, this group finds out, their health numbers are not what they were told in the beginning?
I would say this: what I find working with Magnet HR and the clients is that we are looking for a partnership. And any partnership, there has to be some give and take, and there's some at times maybe some uncomfortability. But at the end of the day, if Magnet HR and the Shoup Benefit Group works with company XYZ, we're a partner of them. We're an extension of them. We're an extension of their HR department. We're an extension of their benefits department. So we want to build that relationship so that we have a good feel for them, because the time and effort and energy that we're going to put forth in earning their business can't be severed off of a piece of paper. We want them to have more value to what we're bringing to the table than just the product. It doesn't matter if it's Blue Cross Blue Shield, if it's Aetna, or if it's Cigna. It could be United Healthcare. Medical insurance and benefits all feel and look the same. but it's who you're doing business with that makes you feel the difference in that maybe the benefit package that you have and the payroll and the HR consulting that we provide for them. That's what they can't forego just because anybody can come in and give them an insurance contract.
Welcome to Rory Money Talks Unplugged, the podcast where we pull back the curtain on HR, payroll, and employee benefits, multi-state tax, and the real issues business owners face behind the scenes. If you're running a company with up to 250 employees and you're frustrated with the vendors you rely on, you're in the right place. I'm Rory Money, the HR tax girl, not a salesperson, not a pitch machine, but an HR professional who spent some time inside a big box payroll company watching business owners struggle with terrible customer service, broken systems, slow responses, and pricing that made no sense. So I walked away and built something better, a service that actually cares. Each week, we're talking about the business owner's real experience, the confusion, the messy invoices, the hidden fees, the multi-state tax headaches, the business renewals that feel like a mystery, and the payroll platforms that make your life harder instead of easier. I'll help you make sense of the muddy mess you're stuck in, break down what's costing you money, and show you what it looks like to finally have clarity, control, and support from a team that truly has your back at Magnet HR Group. From people to processes to profit, we'll talk all things business and all things HR without the fluff, without the pressure, and without the sales pitch. So grab your coffee, hit subscribe, and let's start clearing the path so you can run your business with confidence and the support you deserve. This is Rory Money Talk Unplugged. Yeah, definitely. And I think we've seen that a lot of times. And I think when we're dealing with prospects or clients and, you know, when they're trying to pull together this data, and it's frustrating having to find out, you know, well, what does that employee's dependents look like? Is it their spouse? Is it their 3 kids?
Right.
And then you have a competitor come along and is like, oh, we don't need that information.
Right.
We'll just get you some quotes. And those quotes really aren't accurate. And I think a lot of the businesses that we could deal with at times may not know that at the moment. So when it comes down to pricing, that competitor, their pricing could look better, and that's not really the case. So let's kind of break down the terminology, right? Level funded and fully funded or self-funded plans, level funded versus self-funded plans, and the pros and cons of that.
So I guess as we all know at this point in time, the government's real big with regards to the Obamacare, and part of the shutdown was the funding of Obamacare. So maybe I'll just regress just a little bit back to the fact that in 2010, when Obamacare first came forward, there was product that was designed and product that insurance carriers said, this is what you have to do. If somebody's 32, whether they're male or female, whether they are or aren't childbearing, they're going to pay a rate that's based on 32 years of age for that particular plan. That's a fully insured type market. What the insurance companies did was then they took a little bit of time for them to develop and create their new widgets. You know, it's like they're in the insurance business to sell insurance policies. So if you give them the rules and the regulations or the guidelines, they're going to create product that enables them to continue to do business in a manner in which they have done in the past. So part of the Affordable Care Act also alluded to that if you were self-insured or if your product was filed as a self-insured product, worked for the church or the government, then you were exempt from the Obamacare, or you were exempt for some of the requirements from the Affordable Care Act. So insurance carriers started creating products they now call level funded. Level funded products are on the same platform that a self-insured product is on. So it's filed as a self-insured product, but what these insurance carriers are creating, or they're creating a maximum monthly premium, the same that we do under a fully insured. So you pay the maximum monthly premium that would be to any exposure that you would have under the plan, so that at the end of the year, if your level funded plan was upside down because claims fundings exceeded what you were putting in the bucket, if you will, as a normal self-insured product, you'd have no exposure. They've twisted the name a little bit, but it's filed as a self-funded type insurance, just called level funded for the small group market. So what's the pros and cons of this product? Under a fully insured product, let's start there because it's more of the basics. It doesn't matter what medical conditions you have within your group. It doesn't matter what gender makeup you have, if it's predominantly female, predominantly male. As we talked about, it's going to take all your numbers of the ages of the employees there. If you want it age rated, you can get it age rated. If you wanted a composite rate, they're going to total all the different ages of what those rates would be for that particular product that employee had signed up for. And again, that's at the employer level where we choose the product or the plan. But everybody that's from whatever age, then they average that age, and then they say, oh, here's your average composite rate. So if you want to use the composite rate, you can, or you can use the age rate. No matter what medical conditions, no matter what necessities that you would have under the group. If you were a predominantly all-male group, you'd still have maternity benefits. If you were predominantly all-female groups, and it just doesn't take anything in consideration with regards to the health or the needs of the group. Now, not that all plans don't have maternity benefits, so I just use that as an example, but in the level-funded product, the insurance carriers are able to ask medical questions to the employees within the group. And that's why it's important that you work with a broker or an HR service that can give you some of those protections from a confidentiality standpoint, where an employee can have an enrollment portal tool that enables them to be confidential and explain to any type of health care that they may have or that they have going on. From a confidentiality standpoint. That level-funded carrier that offers those types of products then can medically underwrite this group. They can't eliminate anybody out of your group. They can't put pre-existing conditions on anybody in your group. They can't laser any type of claim like you would find in a true self-insured market. They either take all the group and they can increase rates by a certain percentage if they need to take on those medical conditions. Ultimately, for those groups that are healthy and those employers that maybe in the smaller groups of 25 to 75 that can easily go through that type of process, they are finding themselves going into the level funded market because they can prove insurability, get better rates than what a fully insured plan's becoming. Many years ago, when I first got in the insurance business, when I was telling you that I was trying to prospect and I didn't know who to call on, I started cold calling on doctors' offices because I had gotten through the internet or whatever it would be that the medical association and the doctors' associations, physicians' associations, the AMAs were all getting these high rate increases on their association insurance plans. So I went to door knocking, and it would be offices from 2 to 4 employees, 2 to 9 employees, sometimes 12 or 15 employees. But part of that whole process was the fact that pull within that association, and this is sometimes where we find that when we address maybe a PEO or when we address employers that think that, hey, I need a larger pool so that I can get lower numbers, sometimes the larger pool is unhealthy. And when that unhealthy pool is under that insurance tab, if you will, the only way that insurance company can afford to keep that pool going is to increase rates. So that's why the high-risk pool, or the pool that we talk about with regards to the Obamacare, that's why those numbers are increasing so high. It's because those individuals that are staying within the Obamacare pool, healthcare.gov, are being hit with rate increases because the healthy people or the healthier groups are moving aside from that, away from that, so they have a smaller group of people, so therefore you're going to have higher increases.
That takes me to really coming up to the question on, we're talking about kind of groups that maybe, they're companies that hire a younger, generation, but then you have some, more senior people in that group. And how does that really affect their group overall when you do have such a young group and then maybe a few senior aged individuals as employees? Does that really affect the cost? Because what's the most thing we hear, right? Benefits are expensive. So, how do you provide guidance when you see groups like that, and how does it affect it?
Well, I think that, as we all know, insurance is about the law of large numbers, or the average of law of large numbers. So again, because we don't always know where that um, older person may be as in the position with the company, whether it's the owner, whether it's the owner's brother, or whether it's somebody that's been with the company for 25 or 30 years, and there's no way to eliminate or that position. You're not going to eliminate that position. So I think that yes, it's important for us to try to keep our population as young as possible within the company, but it sure beats the alternative of having. You want to have birthdays, and so it sure beats the alternative of not having them. And so, in the long short of this story is that it's going to be an average age with regards to all products in the benefits world, whether it's your group life insurance, your short-term, long-term disability, whether it's your medical care, your dental care, your vision care. It's all about what that census template looks like when it's loaded into the computer system at whatever ABC insurance carrier that spits out and generates a number. But I would say this, and again, part of being small and in my agency trying to stay as a small boutique is so that I can handle, or we can partner together to handle clients that might not be as comfortable with this word Medicare. And a lot of times in this day and time, employers and employees are having to work longer. They're getting past their 65th birthday, and they don't have any intent to really leave the employment. They enjoy what they're doing, which is wonderful, right? So maybe what we can do, and a lot of times, is to comfort that transition of taking an employee from a group plan over onto the Medicare side of the world, and then that person can continue to be employed. That person just can elect to choose to go onto Medicare, and the reality of it is that it's probably a much richer benefit structure in most cases than what we see today in the group medical business. Because of just the out-of-pockets, the deductibles and out-of-pockets that we have to incur today to try to keep costs down so that we can afford them.
Yeah, definitely. We want to always try to keep the cost down. Um, so that kind of leads me to question some of the companies that we have dealt with through the last like 20 years, right? Of maybe they are in a PEO and they think that being in a master plan gives them better cost being in that large group, right? Amongst a ton of different companies across the country. How do you normally approach a group like that could be being in a PEO currently and then coming off of a PEO, being in a standalone medical plan?
Right. Rory, I think I want to circle us back down to the fact about the word we used as a partner. If we're a HR partner and a benefits partner to an employer, we may not always be the right fit for everybody, and we totally have to. While we want to be, we may not be. And if an employer does their evaluation to see which may be best for them versus a concept that may be a wrong concept, but they've heard perceptually that being in a PEO or being with a larger association, being connected to a chamber of commerce might enable them better benefits or might enable them better discounts on payroll. That's a misconception. But again, we're not going to fit right. We're not the fit for everybody, and there'll be some that will find themselves that that's the direction that they want to go, and we wish them the best. We just wish that when they find that they're ready to make a change, that they give us another option of trying to earn their business. And again, I think it stems back to the fact that not every PEO that's out there wants every piece of business. While they can't cut people away from them, from the selection standpoint, they can drive them out by pricing them out. So a lot of times and I'm not trying to talk bad about an ADP or Ceridian or one of the other different PEOs that are out there. They're all good companies, but they may not be the best fit for you as an employer. And if it's no differently than you and your business, if you're not evaluating anything and everything that you're doing as a business practice to making sure that you're being able to provide your clients what they're needing best, most efficient, then, shame on you. And I think being in the small boutique that we're in, partnering with Magnet HR, we don't have a lot of crystal balls and a lot of chandeliers and a lot of people on payroll and a lot of people that we have to compensate to maybe answer one of your employees that would call in from a call center standpoint. They're going to get real people. They're going to get people that are aware and feel and touch and emotionally are tied to everything that they have when they have those anxieties. So again, you and I won't always be the right fit for everybody, but I think that if we find the right client, the right prospect that understands where we're coming from, that they may find that not being in a PEO is their best option.
Yeah, definitely. And I agree, right? Some of those big box players are good fits for certain situations and we've seen that, right? And we always are very transparent when we're looking at groups, and they may have a great deal where they're at with the PEO they're in because their group could be more of a sicker group, and we just can't compete with the pricing if we bring them out on a standalone plan. And that's really what it comes down to, I think, is that transparency, not necessarily trying to get the deal, but rather telling that group you've got some good rates right now. You might as well stay where you're at. And if something changes, then we're more than happy to, look at that for you. So one of the things I want to bring up, George, through the years, obviously you've been my mentor when it comes to benefits, and you've always told me a famous quote that I've always remembered. So tell us what that is.
Well, I have a lot of quotes, Rory. Being a football official all the time, you have to have these one-liners just to get back at some of these coaches on the sideline. But I would say probably the most applicable quote that I would use would be that, people don't plan to fail, they fail to plan.
Yes.
And that takes place with every avocation, every vocation, life in general. Nobody has an intent to run a stop sign. They were just in a hurry, and they did, and they had a car accident, right? So I just say that in that quote is how you and I have tried to practice our business, and that if we have a plan, then we can be successful. If we're just shooting, darts into the ocean, we might get a fish. We may get the whale, but our chances aren't very likely that it's going to take place. But if we have a plan and we can bring the fishing into a barrel, then we have a good partnership with the fish and the client and the payroll services, the HR benefits side of it. It all seems to work together. So yeah, I guess if that's the saying is that people don't plan to fail, they fail to plan.
Yes, that's the one. And I want to talk a little bit about life insurance. Through the years, we've seen some, difficult situations that families have had to go through, and life insurance being a main factor. What would you say to some of our listeners or employees that maybe don't have life insurance and don't have a big savings and, $100,000 sitting cash. So if something happens in life, they leave nothing to their family or burial expense. People just don't think about those things. They're difficult to think about.
So Rory, I agree with you to a lot of extent. Right, wrong, or indifferent, most employees look for their employer to provide them benefits. Sure, the first question is, how much am I going to get paid, or what are my job duties, and how much am I going to get paid? And then from there, it's, what type of benefits do you offer, and how much is that going to cost me? So what we try to do in this benefit world that we're in is to try to help that employer to retain employees by offering them maybe less expensive benefits, but more of benefits and options for that employee to be able to provide additional insurance for them and their dependents without having to sit at the kitchen table with the life insurance agent and start talking about burial policies. That's no fun, right? I mean, while there's one thing we're guaranteed, and that we all will pass at some point in time. How we plan to get to that point, or what we plan in order to take care of when that tragedy happens, life expectancy happens. Unfortunately, a lot of it's left on the employer. So, to your question, what we try to do is we try to create a benefits package that allows employers to not just offer medical insurance, maybe medical, dental, or vision, but to offer some of this ancillary type product that you're talking about with a life insurance policy or a group life insurance policy. Very inexpensive for what it would mean at the time that, God forbid, somebody died prematurely, and what it would mean for that family or their dependents that are left behind. So the life insurance is one of them. In my tenure in this beast, there's two things in life that are real valuable. One of them is time. Your other valuable is your ability to earn wages. And you have to have time to be able to do that. You have to have health to be able to do that. So I tell everybody that the disability, and we call it disability in the insurance world, but it's really short-term or long-term income replacement. Your ability to earn an income is one of the most precious assets that you have the ability to stay doing. Without your health, you're not going to be able to be very successful. And unfortunately, unless you live in a trust or you have other ways of being able to provide that, if you're too sick or too hurt to work, who's paying you? And a lot of employers aren't aware of the fact that, well, hey, I'll keep John Doe on the payroll and I'll just keep paying him. Well, we can't do that if we don't have the right line items or we don't have a sick pay plan document in place. So the best way for an employer to really provide that disability or that income replacement is through discounted dollars and buying an insurance policy that covers all employees at 60% of their pay to $500 a week or $1,000 a week, and then extending it into the long term, something that goes on after that 26 weeks or something that may go on till age 65, so they can increase that disability benefit to transition into a monthly benefit for them. But to your point, the ancillary products are great golden handcuffs to try to tie employees to employers. I can tell you from groups that I have that are 5 employees to those that are 500 employees, it's amazing at how many employees buy their life insurance or that buy their disability or their income replacement through their employer, because they get discounted rates by doing so, and it doesn't take any time away from them and their families. When they're away from work, they can focus on them and know that they have a policy that they have protection on.
I think a lot of times, too, you're talking about the life insurance and disability that employees may not know is some of those policies are portable. So if they do get it through their employer, they can port that policy and kind of take it with them when they do leave that employer. Is that correct?
That's correct. There are those policies that are very portable, and they're usually in age bands, like 5-year age bands. They're not increased by the fact that you've terminated employment. The premiums aren't increased, is what I mean by that. Which maybe the facade out there with regards to when you terminate employment, your medical insurance goes up double or it's tripled. Well, usually it's never going up more than 102% of what the employer is paying, right? But if you had a plan that was $500 a month and you were only paying 100 because your employer was paying the other 400, when you terminate employment, your cost now is going to be $502, right? Or $510. So you think, well, they just really jacked the price up because it's Cobra. It's not so much the price has been jacked up. It's the same price. It's just that you as an employee now are paying 100% of the cost. With regards to the life insurance and the disability that's sometimes portable for them, that cost would be what they're paying while they are still employed.
Definitely. I, I think about some situations we've come about through the years, and life insurance, it's always best to try to get it when you're healthy, right? Because you can't, not that you can't, it just becomes really costly, right? If your health declines and then you're trying to go get life insurance, obviously the carriers and underwriting see that as a big risk.
Right, and to your point, that's probably overlooked a little bit in at time of enrollment when we set enrollments, and again we've talked a little bit about all this. What we do differently that separates us is that we want to be involved in the enrollment process during open enrollment, during employee meetings. I think that an employer loses a lot when they think that in this day and time with the digital world that we can just put it on our website and an employee can go out there and enroll for whatever they might want. Well, that might hold true if you have 15,000 employees or 500 or 200 and they're located all over the country. But what we like to try to do is to partner and be able to share that message that how great and wonderful your employer is and being able to provide all these benefits for you. And one of the one of the great items with regards to the worksite marketing products that you might be alluding to here with the group life, the group cancers, and those types of things is that medical questions aren't asked. And unfortunately, if you go out into the private sector to try to buy a life insurance policy or disability policy, then you're going to have, a tremendous amount more underwriting to take place than what it would be on that group platform. And in most cases, there's usually a guaranteed issue amount of $100,000 or $50,000, no medical questions asked. And so it's just based on being 32, 42, 62, whatever that age would be, and you buy them in $10,000 increments to a maximum of whatever the guaranteed issue amount would be. That in itself, with the fact that you don't have to prove insurability, is a tremendous benefit by being able to get it under an employer platform.
And I think, one of the main reasons, right, that I partner with you throughout the years is I I'm confident and I trust that you and your team take care of the clients and the employees. One funny story we have is, we say we're always available, right? You're not going to call an 800 line and get whoever that may not even know who your employees are or your group. And tell the story. We had an employee that called on either Christmas or New Year's, and you answered your phone. They were in the ER. Something happened.
Right. Yeah. So we had a client that called. I was snow skiing in Colorado, and I had skied down to the midpoint, and I think it was January the 1st. And I looked down at my phone, and I had missed 2 or 3 calls where they had tried to call me back. And long story short was that, yes, we had an employer that their son had drank something from a can, like a Diet Coke or something, and the tab of the can had broken off into the can, and so they went to take a swallow, or I guess the last swallow, and the tab off of the can got launched in his child's throat. Obviously, they went to the emergency room. They had they knew where to go, but when they got there, they had no ID card. They didn't know they thought the insurance carrier was Aetna, but they weren't for sure. Is there anything that we could do to help them? So yes, we were able to download and share with them how to download through their smartphone, their ID card, and was able to obtain services from them. Yeah. But, Roy, that's what you and I have done and shared stories for a number of years. I mean, no differently than somebody that didn't meet payroll on Thanksgiving Day, and knowing how important that was for that family. You've told the story where you've driven to Oklahoma to deliver somebody their payroll who didn't have automatic debit. They were a new employee, whatever it might have been, whatever the reason might have been, but there was nothing that you weren't going to do to keep this employee from being able to enjoy Thanksgiving Day.
I went to Western Union and got them their money.
Right.
Yes, I did. There is no big box player out there that's going to take the time to do that.
Exactly.
And it was around, I believe, the holidays. So I think it was snowing in Oklahoma was
Right.
what was going on, and they couldn't get, but they could get down to the store for them to receive their money. So yeah, that was
Right.
that was some good stuff right there. So, um, one kind of last point that I think is important that a lot of companies may not really realize, right? The business owners off doing their thing, building their business, growing their business, taking care of their clients, and really don't drive into their medical invoices and reconciliation and how important it is to really reconcile monthly when you've got, maybe you're a larger group, 80 employees, and you've got new hires coming on, you've got terminations that are happening, and how that really affects a company financially.
Right, Roy, that's a great point. And, I think that you do a great job with your client base and your benefits administration as one of the services underneath your payroll and HR consulting. Um, there are tons and tons of terminations. When you talk with a client, their biggest concern is obviously the cost of the benefits, but then the administration. And sometimes when we think about administration as a broker, I'm thinking that means maybe your plan doesn't work right, or your employees don't know how your plan works. So you're having a hard time trying to explain to your employees how the benefits work. And we're always like, hey, we'd love to come out and have that opportunity to visit with them, or here's our phone number, have them call us directly, because that's what we do know. We do know the insurance world. The next line item that usually comes about is the administration. Why do I have so many retro ads, or why are there so many retro terms, or how come I can't get this money back? Well, Senate Bill 51, which has been a little bit on the is it or isn't it still part of the insurance carrier? They don't have to abide by Senate Bill 51, but it's still out there. If they want to, they can. And what we're getting at there are those retro terms. And a retro term would mean that here we are on November the 13th, and one of your managers notified HR that John Doe hasn't been to work since November the 1st, but we've been providing him benefits and we're past that point. Well, at this point in time, we can't get November. But if this were to have been November the 2nd, and you worked with Rory or myself, Magnet or ourselves, we have the ability from an administration standpoint to go in that day and terminate that employee, where you may pay the premium, but you're going to get your premium back. If you don't have somebody that's watching your administration, your billing, your invoicing timely, you'll find yourself at the end of the year where your benefits might have been the least expensive thing. It's all the extras that you've had to pay on employees that are no longer even with the company. So we try to make that path and that process seem seamless, or seem to be a little bit more effortless. But we know there's always going to be that November the 13th term we can't do anything about. But if we know on November the 2nd, or we know that on December the 30th, when we start approaching the New Year's, that we're touching you saying, hey, do we have any terms that we need to get off for this new bill generates, et cetera, then that will help you as an employer, so that you're not having to front out several $1,000s a month for benefits of an employee that's no longer with you.
And I think too that a lot of people don't really realize, if you're not reconciling throughout the month and you have a termination, you want to make sure that your processes are in place. So when that employee is terminated, that final paycheck, you're taking their final premium out of that final paycheck. Because once that employee's gone, you're not going to get your premiums back.
Right, for sure. And once you've given them their last paycheck, you're not going to be able to bill them,
Right.
And Rory, I think your point is very valid in the fact that, we talk about the whole picture from an insurance carrier that's billing the employer. If that employee has voluntary products, if that employee has other products in which they're paying for them themselves, to your point, if that's not reconciled and that employee is about to be termed or that employee terms unbeknown to anybody, then you need to make sure that you're not also buying his family's insurance as well, his or her family insurance. Yeah.
And we've seen that through the years.
A lot.
And I think, one of the things that Magnet HR Group has implemented is actually our team are degreed accountants, because I understand, having that slight background in accounting before I got into HR, how important it is to really make sure who's working on that group, they understand numbers and can understand the financial impact that it could cause for a client. So, George, thank you so much for being here. And for any of our listeners that are interested in group benefits, medical, dental, vision, life insurance, short-term, long-term disability, any ancillary products, they can contact us at support.magnethr.net, or they can call the office at 972-713-8618 and get directly to your team.
That's exactly right. Thank you, Rory.
Thank you. Thank you for listening to today's episode of Rory Money Talks Unplugged. Real talk on people, payroll, and cost-effective solutions that help businesses drive profits. If you enjoyed this podcast, hit like and share it with anyone in HR, payroll, benefits, or business ownership, or even your dog if you think they'll find it helpful.